Welcome to Insurance Talk with Cheri and Rex. We're the father-daughter team out of Bancorp Insurance, located in beautiful Lapine, Oregon. And today we've got a two-part series for you. We're going to hit inland marine. So the first part of the show, we're going to do inland marine physical damage. And then the second half of the show, which there'll be a break, and we'll record more, so you can listen to the second half too, will be about the liability involved in inland marine or mobile equipment.
Right.
This one's exciting.
This is a line of coverage where we get a lot of questions because it's kind of complicated and even we'll just start off with the beginning of this conversation. You use the phrase inland marine.
Yeah, let's talk about that. That's a weird word.
Yeah, that's weird. I mean, it's not like, is it marine or is it inland or, just exactly what are we doing here?
What are you insuring when you insure inland marine?
Well, let's go way back in history. We're going on a trip, yes. Mr. Peabody. Obscure reference to a cartoon from the 60s. So, back in the early 1800s, there was these smart people who figured out steam power. And steam power was pretty cool. It could make, things spin and, could be used for industrial processes and so on. And somebody decided that it was a good idea to put one of these things on a boat. And they put it on the back of the boat, and they had these big paddle wheels on the back of them, and they could make these things go upriver, which was really pretty cool. And they could also use them in ocean shipping. The other thing they did is they started putting them on carriages and have these carriages, go down tracks and create locomotives. Now, the people who were putting all of this money into this equipment and these new technologies went to the insurance people that were around at the time, and the insurance people, being insurance people,
well, they were doing marine insurance.
Well, there was really two kinds of insurance roughly then. There was marine insurance, which was people ocean-going boats, and most of this was done from Lloyd's of London, out of London. And then there was property insurance, and these were people who were insuring buildings from fire and wind and hail. And at this point in time, most of the fire insurance was done, they even had these lead things that put on your house. And if the fire department didn't get to your house in time to save the lead thing from melting when your house was on fire, the fire department didn't get paid. We're not in the most sophisticated world at this point.
But now we're putting engines on boats and making locomotives.
Right. So
that sounds dangerous.
The people who are doing fire insurance for buildings says, we're not going to do it, it moves. And the people who were doing ocean marine said, we're not going to do it because it's not on the ocean. And so everybody came up with a new idea, and they called it inland marine. And because it's inland and it's marine, and that is how we got the phrase, and we've been using it since the 1820s.
So it's not weird. We think it's weird because it's not every day, but it is.
It makes 100% sense.
Yeah, it makes sense.
And how that has morphed from steamboats and just locomotives, it's morphed into other things. We will call it instruments of transportation. Because when they started creating streetlights, we don't do that. Fire department guys, fire insurance guys didn't want to do that. Let's talk about bridges. We don't do that. And so as time went on, the inland marine underwriters started doing more and more things, and most of them were associated with instruments of transportation and trucking. Just think about the first time there was a steam shuttle. Someone built, and they're using it in a pit or mining with it or making roads or what have you. All of these pieces of equipment needed to be insured, and the standard insurance marketplace just was not into it.
Yeah, I can see that.
So, but how does that really apply to us right now? And because what most people, and are thinking about when we start talking to them about inland marine, most of the time we're talking to them about their equipment.
I mean, today I think of bulldozers
and backhoes, trackhoes, and so on.
Yeah.
Now, one of the things I need to make really clear at this point in the conversation is that when we are talking about inland marine, we're talking about physical damage to the equipment. That means that if the equipment is catches on fire, if it's falls in a hole, tips over, is stolen, that is what we're talking about. In the second episode of this conversation, we're going to talk about how a general liability policy covers mobile equipment, what is considered mobile equipment and what is not. So, and that's for liability. That would be if you were using your backhoe or your other equipment, however you were using it, and it somehow injured somebody. So the first part is about physical damage. So that's where we're going to dive into now. So for the most part, people who have a backhoe, it could be also just as simple as tools and equipment. We have
and as big as a crane.
And as big as a crane. There's
buildings.
$300,000, $400,000 pieces of equipment are often insured by inland marine underwriters. And how it is insured is basically they insure it for fire, wind, hail, smoke, riot, civil commotion, most of the natural perils. Almost always includes theft. And for most of us and most of our customers and the small business person, what do you typically have? You have equipment that is out in the field that is not contents of your building. So besides the equipment, besides the bulldozer and the backhoe and the trencher or what have you, then there's miscellaneous tools and equipment. So when we put this on a policy, and so you have let's say you have a backhoe. You tell us, okay, it's a 1999 case backhoe, and it's worth a certain amount of money. We put that, we schedule that piece of equipment on the policy. So you'll actually read it. It says, this is what the equipment is, and this is how much we're insuring it for. It's almost always insured for actual cash value. So if you have a 1999 case backhoe, maybe a brand new case backhoe of the same size might be $150,000, but a 22-year-old one might be only worth $25,000 or less. So we always put the value of the piece of equipment that we're insuring on the policy, and we schedule it, and that's the most the insurance company is going to pay you for it. So you do need to recognize that you're not going to get a brand new one. Now there are certain cases where we can get replacement costs for some equipment, but that's a specialty situation, and those are on a case-by-case basis. And if that's important, then we need to talk to you, one-on-one about something like that. So that's how most equipment gets insured. The larger equipment. When we start talking about smaller equipment,
It's not gonna be like power tools.
You're a contractor. How many contractors we know haul a trailer around?
They have all their things in it,
and sometimes they get left at job sites, and sometimes they disappear in the middle of the night. Now, the trailer itself needs to be on your auto policy because it is a wheeled vehicle, and it should be covered by the it should be listed on your auto policy, and you'd get comp and collision just like you would for your vehicle. But the stuff in it is, you've got thousands and thousands of dollars, everything from extension cords to hand tools to your electric drills, the table saws, small table saws or hand tools, small power tools.
It could be like even landscapers. You think about sometimes they'll have a truck just full of weed eaters, full of lawnmowers, full of all the things.
All of that. So what we tend to do with anything that's worth less than $2,000, and sometimes we pick a number like $1,000, we'll say, all right, we're going to say we have miscellaneous tools and equipment, and we're going to put, and we feel we've got $20,000 or $30,000 or $50,000 worth of this kind of equipment exposed. We will give you a $50,000 limit, but no more than one item is worth $2,000. And that number is flexible too, because it could be, 1,000, could be 2,000, could be 5,000, just depending on the type of equipment that we're doing. And none of it is scheduled. You don't have to tell us what you got. All you got to do is if you have a claim, you got to be able to make a list and show the
That's
insurance.
that inventory that like we talk about all the time in home like home insurance.
Right.
It could be very useful as well if you have a ton of hand tools.
Yep.
Like,
Yep.
what do I have in the trailer?
Yeah, what do I have in the trailer? Take a picture of it, because, literally there could be all kinds of things that could be in there, and you will never remember. I mean,
How many batteries do you have for your drill?
Yeah, those kind of things. So those are the two primary things that we do talk about when we're talking about inland marine for a small contractor. When we talk about other situations that a contractor might need an inland marine coverage, there's something called a floater, installation floater. And what an installation floater does is, let's say that you're a sign guy and you're putting signs on buildings. Okay, well, you need to cover that sign from your shop till it's on the building. The installation floater is going to cover that sign
as it's floating to the building.
As it's going to the building in your truck. Other kinds of inland marine coverages, a course of construction policy is considered an inland marine policy. What does a course of construction policy cover? Well, you're building a building and you're building it for a customer, and you start off with no value. You just got a piece of dirt, but then you're going to put a foundation down, a subfloor, walls and roofs and ceilings and windows and doors and sheetrock and HVAC and so on. That building needs to be insured while it's being constructed. And that is not considered a property policy, that's considered a course of construction policy, which also falls under the inland marine category. Working on one right now where we have a situation where a water utility is putting a new well in and a new tank, and for several $100,000, and the lender that's loaning them the money to do this kind of wants this to be insured while it's being installed. So that's one of the things that we just purchased for them, and that's of course construction, sometimes called the builder's risk. Those are other smaller venues where
inland marine
gets used.
Yeah.
And inland marine is I always think it's one of the most fascinating areas of insurance, because when you're talking about fire insurance, the people who do fire insurance have rules. They have really, really strict rules, and we can do this kind of building, and we can do this kind of building, and we can do this kind of building, and blah blah blah.
But only if it's located here.
And it can't be here, and it can't be there.
Yeah.
Inland marine underwriters have the ability to be pretty flexible. They're usually some of the best and brightest underwriters I've ever met, because they've been given a task by the company they work for, saying, okay, we're going to throw all the weird stuff at you. Oh, you've got a radio tower. You've seen them. They're 1 foot wide, and they've got big guide wires, and they're 1,000 feet tall. Well, that's what an inland marine underwriter is going to insure. Those are the kind of things for property damage that they can do. And so they have to be some of the most knowledgeable and some of the most flexible and some of the best underwriters out there. So if we have a piece of property, we have something that can fall into the realm of inland marine, then we're thrilled to work with those kind of underwriters, because they're the best and the brightest in the business.
Anything else you can think of for inland marine? Maybe like a good story. You have a good story about inland marine?
A good story about inland marine. The big story is if you're a contractor, don't assume your tools are covered by your general liability. They're not.
Yeah. We hear that one a lot.
Well, we hear that one an awful lot. We'll do the GL, and we'll do the bond, and we'll do an auto, and someone will call up and say, hey, my utility trailer was stolen. I need to turn a claim in, and says, okay, well, we got the utility trailer on the schedule with your auto, but we don't have any tools for you. You didn't tell us you had tools. Even though our people are trained to ask, and they 99% of the time do. So you do need to do that, and it's not expensive. I mean, literally, you can get $20,000 worth of tools for $300 or $400 a year, probably, and it's not outrageously expensive. But boy, is it a problem if somebody were to rip you off. Course of construction, I've
seen a lot of these ones, like wind.
Yeah. Oh, yeah.
a building's halfway up and there's a windstorm and now it's halfway down.
It did halfway down, and they have to start over, and
who's going to pay for all that new material?
And the general liability policy, the contractor's general liability policy isn't going to pay for that, because that is not what it pays for. So you definitely need to have that course of construction. We had a case back in the 90s now, where there was a hotel that was being built, and we had a course of construction policy on it. And when it burned to the ground in the process of being built, the insured was thrilled to have it, and so was the contractor. A note on course of construction: the contractor should buy the course of construction policy and not the owner of the property. And the reason is if the owner of the property buys it and there's a claim, the insurance company is going to pay to repair the building. But then they're also going to look around for people to sue for who caused the loss. And we had a case where the sheetrocker and the fire department and the general contractor all got sued by the insurance company for the owner for negligence in allowing the fire to happen. So we had the situation where there was a contractor who was, really, sad that his project had burned down in the middle of it, several $100,000, and he's working his butt off, literally 6 days a week, trying to get this thing, back on schedule for the insured. And then the insurance company shows up one day and hands him a subpoena and tells him they're suing him. It changed the relationship, and that's not really what you want to do.
No, and I'm sure the person who was having the building built did not want that either.
No, well, he doesn't have any choice.
No.
That's just what happens. That's the nature of it. So, inland marine, we're talking about, but to wrap this up, is physical damage on equipment and instruments of transportation, bridges, radio towers, backhoes, equipment, locomotives still, and boats. All of that gets into the inland marine world. And it's something that if you have any of that kind of equipment, please give us a call. We'll go in depth and talk to you about how to best cover that for you, so that if something were to happen, it would be covered.
Yeah. All right. You will hear the next half of this on our next podcast. So stay tuned to Insure Talk with Rex Lasser and Cheri Martinez from Bancorp Insurance, located in beautiful Central Oregon. You can find us at www.bancorpinsurance.com. You can also call us at 1-800-452-6826. We're looking forward to talking to you about your inland marine. Welcome to Insurance Talk with Cheri Martinez and Rex Lasser. We're the father-daughter team from Bancorp Insurance, located in beautiful Central Oregon. We are on our second part of inland marine, so if you missed part one, go back and listen to it, because we talked about property on inland marine and all the physical damage that could happen to a piece of equipment. We went all into detail. Go listen to it.
Listen to it.
Or you can start here with part two and listen to the liability side of the inland marine, because it's also very interesting. But,
it is. It's terribly interesting.
But not as much physical damage to the actual equipment.
Right. We're talking, and this part of it is about liability issues. And liability issues are as you're using your equipment, and your equipment somehow injures somebody, and they sue you.
I always think of, have you seen those YouTube videos where the backhoe's spinning around in circles and there's like a guy hanging onto a rope on it?
Yeah.
And then they fling him into a pond or
yes,
something?
Yes, I've seen those. Yes.
Yeah, I think of that.
You think of that, and what could possibly go wrong?
I mean, obviously nothing.
Nothing at all. Nothing at all.
Obviously, it's a great idea.
It is a great idea. So, to get the conversation started, what is liability? Liability insurance covers you in the event that you are negligent for bodily injury or property damage to somebody. Okay, and it comes from your premises and or your operations. Now, there's a couple ways that we get liability insurance. The typical business has liability insurance for a general liability policy. They also have liability insurance on an auto policy. There are other kinds of liability insurance that people buy. There's employment-related practices liability insurance. There's directors and officers liability bodily injury and property damages, which is 99% of the time covered by the general liability and or the auto. So,
like how does this relate to inland marine?
How does this well?
Besides people throwing each other out.
Yes, around with a backhoe. Well, it's pretty obvious that most vehicles are autos. They have 4 wheels or 6, and they have, or 18 wheels, depending if you have a big truck. A big truck. And that they have a place for a license plate, and a license plate is required. If you have any vehicle like that, then it's going to be considered an automobile, and you need to make sure that that automobile is scheduled on your auto policy. Now, but then there's also other vehicles that we have that don't look like an automobile. And let's just take a backhoe. A backhoe is 4 wheels, and it is, where do I get my liability insurance for that?
Well, you're not driving it on the road, and so you don't have to.
They ride it on the roads.
Yeah,
they're covered anywhere you go.
You're not driving it to the grocery store.
Okay, but let's talk about, we live in snow country here. It's not unheard of for people to remove snow with a grader.
That's true.
So the question is does that grader have to have auto insurance, or is it covered under the general liability insurance? And there happens to be a whole section in your general liability policy which addresses this very clearly. There's 2 sections. The first section is pretty straightforward, and general liability coverage doesn't cover any autos. Just does not.
No auto.
No autos, just plain flat. And that's actually only about a paragraph. And a short paragraph, maybe an inch long on the legalese in the policy. But when we start talking about other equipment, then there's several paragraphs in a general liability policy that defines what mobile equipment is and what is covered under your general liability and what is not. And I actually have a copy of the endorsement with me right here, and sorry, I'm going to read this because I don't have this memorized, but things that are clearly included into liability insurance for your mobile equipment are things like bulldozers, farm machinery, forklift, other vehicles designed for use primarily off public roads. Okay, doesn't mean you can't take them on a public road, but it's primarily for off public road. Then there's vehicles maintained used solely on or next to your premise, a premise you own or rent. So if you have a backhoe or a forklift and you're using it on your property, well, then that would be automatically covered. Or that could even be a crane. Let's say you had a crane and you owned a gravel pit and you were using that as part of your operations. Yeah, that would be considered. That would be covered. Vehicles that travel on crawler treads. Okay, well, your trackhoe, your bulldozer.
I was like
trackhoe.
Bulldozer.
Yeah. But also includes snowmobiles.
Oh gosh. It is a truck?
It's a track vehicle. We have actually resorts that use these snow machines to transport people to and from the resorts in the wintertime.
Which makes sense.
Which, those are the kind of things. They also get themselves in and out of these resorts that are remote, and the roads are blocked or snow covered. Yeah, you're using your snow machine to get to your resort or your cabin or what have you with this. And it's registered to your business, and it would be covered under your general liability. If it's registered to your personal, then no, it's not going to work. Vehicles, whether self-propelled or not, primarily provide mobility to permanently mounted power cranes, shovels, loaders, diggers, drills, road construction and or resurfacing equipment such as graders, scrapers, and rollers. So those are all covered by the inland marine. All right, so then they go into a little deeper, and they start talking about air compressors, pumps, generators, spraying and welding, building cleaning, geophysical equipment, lighting, and well servicing equipment. Those are all considered. And cherry pickers or similar devices.
And then we're just talking about the liability here.
Just talking about the liability.
Yes.
So one of the things that, going down into this further, cherry pickers is a very specific thing. Now, there's two kinds of cherry pickers. Cherry pickers are just machines that you use to lift men and equipment.
It's got a bucket.
It's got a bucket.
Yeah.
Well, there's cherry pickers that are mounted to trucks, and there are cherry pickers that aren't mounted to a truck. They have their own transportation. They move around on rubber tires or on crawler treads. If they're on crawler treads or rubber tires and not mounted to a truck, that's mobile equipment. If they're mounted to a truck, that's auto.
Yeah, and that's where it gets tricky.
And what does get tricky? Then we get into other things that are that are not covered. Is equipment used primarily for snow removal. Now, all of a sudden, we've got a grader.
They just said it was fine.
They said it was fine, but
now it's not.
Well, but a grader is not necessarily a vehicle used solely for snow removal. If the vehicle is only is used for snow removal, and here's an example. At the airport, they've got huge snow removal pieces of equipment. If you've ever seen them work, those are, regardless of the fact that they might not be covered, might not have, they may not look like an auto, are going to be considered an auto for general liability purposes. Road maintenance and construction, resurfacing equipment, and street cleaning. These are other things that, the fine line between being an auto and being covered under your general liability should you injure somebody with them. We've already talked about cherry pickers. So those are, one way you can tell if, one of the primary ways you can tell if something is going to be covered under your general liability is if it's got a place for a license plate and you're required to register it with the state, then it's more than likely not covered under your general liability, and you're either going to have to put it on your auto policy and or put it on buy a specialty policy to cover it.
So if you got to go to the DMV, it's auto.
It's auto.
Yeah.
Yeah, and or if there's actually a place for a plate. Now, one of the situations that we've had in the past is someone will have, this still happens. We got a building owner. They've got an old beaten up pickup. They got a snowplow on it. That piece of equipment never leaves the property. And we actually even mentioned earlier in the deal saying that if this is a piece of equipment that's used solely for use on your property and never leaves, then it's covered by your general liability. Well, I'm going to tell you right now, that vehicle, that pickup truck, that old Willys Jeep, whatever you have that's, you have a snowmobile, a snowplow on it, and you only use it 10 times a year when it snows to clear the parking lot, that is not covered by your general liability. That is got to be covered under your auto insurance.
Yes.
So this is so.
And we're talking about businesses.
We're talking about business.
Yeah, like if you got something at your house that you're clearing, I think it's very similar.
Yeah.
It's like you better keep it on your own driveway.
Yeah.
Like don't let it leave your property.
Well, don't let it leave your property, but even that old pickup with the snow plow on it, that even if it's just only left on your property, no, it's not covered. You must put it on your auto. You put it on a policy. Now, what most people do in a case like that is they'll park it out back and get it tuned up every winter and go out and fire it up, make sure it starts, and then and then they call us and say, put it on my commercial auto policy to get that done. So liability from your mobile equipment is tricky. And I would like to suggest that if there's any questions, if there's any doubt whatsoever, please give us a call. Please ask us saying, okay, this is what I've got. Because there's so many different possible combinations and mixes of what mobile equipment is and what it isn't, that sometimes we just have to reach out to the underwriters and say, okay, where does this one go? Because I've been doing this for 40 plus years now. And there are times when I scratched my head and said, I'm not sure where that goes.
And like the policy is a good place to start. You actually brought one in and you read from it.
Mm-hmm.
But there's a lot of holes in there. There's a lot of gray.
Yeah.
And somebody could say, well, I know this. And,
yeah. how does that apply? Because it kind of contradicts itself at times.
Yeah.
And so they'll say, well, we don't. One of the things I love about reading insurance policies is that you'll go down a list of exclusions, and the list of exclusions will say, well, we're not going to do that, and then underneath it will say, well, except this, except this, except this. So there are times when you really have to read into the policy to figure out exactly what's covered and what's not. A general liability policy is, they're complex. I mean, we're talking just the coverage, the primary coverage form itself, the CG0001 for all you insurance nerds out there, is 14 pages long.
Nobody needs to know that.
All right. I'm sorry.
Nobody's out there.
Please,
nobody's Googling that right now.
Okay, please, all of our listeners, please forgive me.
Nobody's Googling that.
Okay, don't do that. So anyway, that's kind of like a nutshell of liability for your mobile equipment. And like I said, if there's any questions, please give us a call because we would really love to help you out with it and make sure that you're insured properly.
What about like a good story? You got any examples that you can think of?
Okay, somebody's going around a corner with their backhoe on the back of the trailer. The backhoe falls off.
How often does that happen?
If you don't tie it down right.
That sounds like that's...
So is that an auto loss or is that a mobile equipment loss?
Mobile equipment.
Yeah.
Because you lost it, but it's gone.
Well,
around the corner.
It damaged somebody's property when it wasn't on the auto. If it was on the auto, it's covered by the auto.
Oh gosh. So if you got in an accident and the mobile equipment went through the back of your truck.
No, not the back. Somebody else's truck. It doesn't cover your equipment. It fell off in the street and someone ran into it.
Okay.
So that would be covered by the general liability.
I think we talked about the cherry picker is kind of a weird one.
Cherry picker is a weird one.
Yeah.
Because and that used to be a problem because they had to change the policy to say that if it was on a truck chassis, it was auto. And there used to be a situation where well digging equipment, which would be on a truck chassis, and that was also considered mobile equipment, and people didn't put auto insurance on them. But the problem is
they're driving. They're driving,
and there were too many situations where there were too many claims, and who was going to cover it? And some adjusters went one way, and some another. So they really clarified it. If you've got a truck mobile drilling equipment, then it needs to be covered by your and it's on a truck chassis. If it's not on a truck chassis, it's covered by your mobile equipment under the general liability. If it's on a truck chassis, it should be covered under your auto.
All right. We'll wrap up this second part of inland marine or mobile equipment insurance. Like I said, we had part one, which was all about the physical damage. That's the, the dings and dents and the really fun pictures you see on the internet of all of the mobile equipment getting injured on physical damage. That was part one. Go back and listen to it if you haven't yet. And then part two, we're just going to close up for the mobile equipment inland marine on the liability, which is a reminder, it's for if you injure somebody else.
Yes.
Or somebody else.
Be careful out there.
Be careful. If you have any questions about this type of coverage, you can give us a call at 1-800-452-6826. You can find us online at www.bancorpinsurance.com. We are here to answer all of your insurance questions. So don't feel bad about calling us and asking us the dumb one because you're probably not the first one. And if you are the first one, we might have to ask the underwriters too.
It's actually dumber not to ask the question.
I would think so too, yeah. Because half the time we're like, that's a great question. Let's ask that.
And there are times, like I said, I've been doing this for years, and there are times when I will have to go to the policy and have to look it up and just to get really clear on what is how it actually applies, because there are so many different combinations of how things work.
And this particular type of coverage is extra tricky.
Yes, it is.
So give us a call